In this video I'm going to make another live multilayer analysis of the Euro-Dollar 15-minute chart. Without further ado, let's begin the analysis to attempt the true understanding of this market and the long position you see opened in the chart. As you can see, I marked the most important highs and lows in the chart with short blue lines. These points serve as axes for us to grasp the relationship between buyers and sellers later on. The first observation we can make these highs and lows is that they are descending in what appears to be a natural flow without external intervention, meaning that the large traders are not operating heavily in this market. This makes trading a little bit easier and a lot more predictable. We can notice this by observing how the orange sell line coming out of number 3 pinpointed the beginning of market vector 5 to 6. This swinging motion is very common in markets that are not being manipulated. Price will swing back and forth between the zones where control is shifted between market players near the price edges. However, the market starts changing its character after the vector 6 to 7. Observe how this vector is a violation of the natural order that we have noticed in the previous highs and lows. There are two important elements that you must be able to notice in the market vector 6 to 7. The first element is that it completely violates the high number 5, and price is not able to make a stop in the orange line that would represent a sell line or sell area. The second element is the volatility in which price does this violation. Observe that the candlestick that zooms through the orange sell line is one of the widest candles on the chart. When price breaks high number 5 with the market vector 6 to 7, we are receiving an important piece of information that is actually a statement from the buyers in this market. The buyers are saying that they are stronger now, and that natural flow coming from number 1 through 6 has shifted from the hands of sellers to the hands of buyers. Beyond that, we also have a simple reversal divergence in a minor flow happening right before 6. Number 7 is the moment where traders who are looking to buy this market begin to get agitated, and they feel like they are missing the bus. This is an illusion because buyers exhausted themselves to create this statement that they are indeed stronger than the sellers, and they must restore their energy to make another leg up in this chart. Meanwhile, sellers will attempt to bring the market down and make their own statement. This represents a comfortable opportunity for the trader who understands how these market flows function, because we can wait to see how far the sellers will go to see if they will break the buyers or not. Another important point here is that if buyers are going to appear again with their energy restored, they are probably going to do that in the orange line that comes out of number 6. At this point we can begin constructing the line work that will add another dimension of confirmation to this idea that buyers are still stronger than sellers around number 8. Observe the upsloping red line that was drawn from high number 5 to high number 7. This red line was drawn there for a logical reason. This angle represents the new angle in which the market could operate under the management of the stronger buyers. If price was going to continue following the natural flow previously defined, this angle marked by the red line would not even exist. This red line was duplicated to the low number 6, which is the absolute origin of the market vector that twisted the logic of this market. As you can see, these lines are not arbitrarily drawn. They have a time and a place to be drawn in the charts, and that's why they can be so precise. Another element that we could pay attention to, and that would increase the level of confirmation of our new trend bias, is the candlestick that touches the blue horizontal line that comes out of low number 6. Observe that after high number 7, sellers begin their attempt to continue their flow down. Candle number 8 touches the absolute low number 6 level, which is now confirmed market structure after the high 7. Pay attention to the shape of the candle 8. It has a relatively large lower tail, which means that sellers tried to force the market down, but the buyers around that area made the market close in the upper half of that candlestick. This means one thing and one thing only. The buyers that created the market vector 6 to 7 are still present and they are still strong. There are a few more details I want you to pay attention to in the area around 8 and 9. If you take a close look to that area, you will notice that the red sloping line and the horizontal orange line crossover. Beyond that, we can notice that price is somewhat respecting that level if we look at the lower tails of those candlesticks. It seems that price is hitting a wall of buyers that it cannot penetrate. In number 9, we can see the formation of a fractal candle, which adds yet another layer to confirm our trend bias. If we stop for a moment here and we try to compare the reasons we have to go short and the reasons we have to go long, we will immediately see that one list is incredibly long and the other is practically non-existent. That does not mean we can be sure about the market in a situation like this, but we can say that the likelihood of a long trade opportunity is sufficiently high at this point. All of the elements I've been talking about so far are a mixture of subjectivity and objectivity, but the objective element that enables us to make a final decision and trigger the trade is number 9, which is the fractal candle. When a fractal candle appears near a solid market structure like number 6, and after a well-established context like that, you can take the trade with a certain degree of confidence. If the trade happens to go wrong, you can have the peace of mind of knowing that you did everything within the correct protocols. This is a good opportunity because we have a strong context happening near a solid market structure, which will give us a good place to place a stop-loss order. The take-profit target for this trade is a little ambitious, but it can work if the buyers are indeed strong. In this case we will use a Fibonacci expansion. The treatment of the Fibonacci expansion tool is no different than all the other moving parts of the strategy. It must be used grounded in logic. The Fibonacci expansion has 3 points. The first point was placed in the low 6, which is the last solid market structure produced by the buyers on which we are relying for this trade. The second point was placed in high 7, which was the peak of exhaustion from these same buyers. The third point was placed in the low of candle 8, which was the peak of the sellers' attempt to break the buyers on which we are relying. Observe that the 3 points of the Fibonacci expansion were placed in market extremes that are interconnected by the market logic that we have been describing for the whole video. These 3 points are being strategically placed in points that serve as an axis for the market to change. Observe that this Fibonacci expansion displays a level of 161.8%, which in this case appears to be a reasonable place to put a take-profit target. It's a bold target, but it is still realistic if take our trade context into account. The trade was opened at the open of the candle next to candle 9, which was our fractal candle and our objective trigger. Let's jump forward in time to see how this trade ended. Here we can clearly see that our interpretation of the hierarchy between buyers and sellers was correct, and our identification of the market edge around numbers 8 and 9 was also correct. This is what most of your trades should look like in reality. A good risk-reward ratio aligned with a rich context supporting your trade idea. I hope you were able to see all the elements of this trade working together. If you enjoyed this video, please support the channel by clicking the like button, subscribing to the channel, and leaving your feedback in the comment section below. Thank you very much for watching and I hope to see you in the next videos.